Assalamualaikum to Madam Arfah. I am Nurain from DKB2 from Group 3. Would like to inform Madam that my group consists of 5 members, which is Aisyah Kashati, me Nurain, Shafiqa Fakiha, Shamir and Nur Hazman Haziq. Today, we are going to present prime book entries that include purchases journal, sales journals, written inwards journal, returns outward journals, cash book and general journal. Next, let me introduce my name. My name is Nurain binti Muhammad Sanif with my matrix number 01DKB20F2017. Today, I'm going to present Introduction to Prime Entries, Definition and Function of Purchase Journal, its format, and how to record a purchase journal. First of all, let me explain what is prime book entries. Prime book entries is a book or record where certain types of transactions are recorded before recording in the double entry bookkeeping system or the prime entry. The main books are include purchase journal, sales journal, written inwards, written outwards journal, cash book and general journal. Next, I will continue with my next part, which is purchase journal. Purchase journal can be defined to record all credit transactions on credit purchases for every purchases of goods only. The source document which is used as an evidence of the transactions into purchase journal is purchase invoice. Thus, every purchases must record on debit except when there are drawings, so we must record it as a credit. Move forward, there are three functions of purchase journal. Firstly, analytical function. Each transaction is analyzed into the debit aspect and the credit aspect when the time of recording a transaction in the journal. It helps in understanding how each transaction will affect the business. Secondly, to record functions. It helps to record every transaction with principles. Thirdly, is historical function. It is for the future references to help the business to analyze their past performance and chalk put their future possibility. For purchase journal formats, there are 5 columns as it shows in the picture below. In the first column, start from left to the right, is date, account credited, invoice number, posting reference and amount. The function for each column are date to record the purchase date, account credited to record the name of the business from which company or merchandise was purchased on account, invoice number to record the invoice number from invoice given for reference purposes, posting a reference to record the account number after posting to ledger, and last is amount is to record the amount that shown in invoice. Last but not least, this is the example on how to record purchase journal. On credit purchase account is debited where the creditor's account or the name of account payable itself is credited with the equal amount. Thus, the creditor's account acts as a liability. The example of transactions that I put in here is 1st October purchase goods on credit from supplier A for RM300 with invoice number 10/112. 9 October purchase goods on credit from supplier B for RM2,500 with invoice number 10/113. 25 October purchase goods on credit from supplier C for 790 with invoice number 10/114. And 31st October purchase goods on credit from supplier B for 1,750 with the invoice number 10/115. And in the last day of the month, we will counted the total of transactions of credit purchases that happen on that month. And I think that's all from me today. And thank you for lending your time. The presentation will be continued by our next presenter. Thank you.
Assalamualaikum and a very good day to everyone. My name is Shafiqa Fakiha binti Shahriman with the registration number of 01DKB20F2024. I am from class DKB2 and today I'll be doing a presentation on sales journal. On today's presentation, I will be explaining about the definition of sales journals, the format and way of recording sales journal, the limitation and also the example and conclusion on sales journal. Firstly, what is sales journal? Sales journal is used to record all of the company sales on credit. Most often, these sales are made up of inventory sales or other merchandise sales. A sales journal is a specialized accounting journal, and it is also a prime entry book used in an accounting system to keep track of the sales of items that customers have purchased on account. Every transaction that is entered in sales journal essentially results in a debit to accounts receivable account and a credit to sales account. Next is recording of sales journal. The sales journal typically has 6 columns, which is a column for the transaction date, column for account name or customer name, invoice number, posting checkbox, accounts receivable amount, and cost of goods sold amount. Since all sales recorded in the sales journal are paid on credit, there is no need for a cash column. Next is the format of sales journal. The information recorded in sales journal depends on the nature and the needs of each individual businesses. However, a commonly used format of sales journal is firstly, the date column, which is used to record the date on which the sales is made, and normally it is the same date as written in the invoice. The second one is the account debited, where this column is used to enter the name of the customer whose individual accounts are maintained in accounts receivable subsidiary ledger. The third one is invoice number, where the sales invoice number is written in this column. The fourth one is post reference, where the entries in sales journal are posted on daily basis to relevant accounts in accounts receivable subsidiary ledger. The post reference is used to enter account numbers of individual accounts in the accounts receivable subsidiary ledger in which the entries are posted. The next one is accounts receivable and sales. In this column, the net amount receivable from customer is written. Lastly is cost of goods sold and inventory. In this column, the cost price of the merchandise sold is entered. Next is the example of sales journal. The question stated that XYZ company sold the below goods on 1st April of 2020. There are 4 transactions involved, and the question already stated to whom the goods are sold, the amount and the cost of goods sold, and also the invoice number. For example, one of the transactions is that the goods are sold to L&T Limited for 500,000 on credit, and the cost of goods sold was 375,000 through invoice number of 142. On the next slide, I will explain in detail about all of the transactions in the form of sales journal. Now, I will be explaining about the answer for the question on the previous slide. As you guys can see, all of the transactions are done on the 1st of April on 2020. For the first transaction, it is debited under the account of Messrs. Albert Limited under the invoice number of 140 for accounts receivable of 200,000, and the cost of goods sold is 150,000. The second one is debited under the account of Messrs. Mitchell Limited under the invoice number of 141. The accounts receivable are 300,000 and the cost of goods sold are 225,000. The third transactions are debited under L&T Limited under the invoice number of 142, and the accounts receivable are 500,000 and the cost of goods sold are 225,000. And lastly, the account is debited under Messrs. Global Limited under the invoice number of 143, and the account receivable are 50,000 and the cost of goods sold are 37,500. Lastly is the conclusion. An entity should maintain sales journal in the prescribed format by generally accepting accounting principles for an accounting of credit sale transaction so that debtor records and credit sales records can be managed. Its usage is overall beneficial for an entity. And if the company does not maintain a sales journal and forget to pass on any credit sales entry, then it will be a loss for that company.
Good morning and Assalamualaikum. My name is Aisyah Kashati binti Barul Ulum. My metric number is 01DKB20F2007. From DKB2, we'll continue this presentation by explaining about written inwards journals and written outwards journal. Before I explain further about written inwards and written outwards journal, I would like to share with you guys the source documents that involved in this journal. So there's 2 types of source documents that involved. The first one is debit note, and also the second one is credit note. So here is the example of debit note that I took from Google. So this is the source document, which is debit note. The second source document is credit note. This is the example of credit note. I also took these pictures from Google. This is the flow of credits and also debit notes. A purchaser will send a debit note to the seller when the goods is returned as they are found unsatisfactory. Next, the seller will send credit note when they are under charges or send additional items to acknowledge the debit note that's sent by the purchaser. This is the format to record written outwards and written inwards journal. There is 5 information that you need to include, which is dates, particulars, credit note number as the reference, the folio, and also the amount. I put the example under here so that you can see how is the written inwards recorded. So what is written inwards journal? Written inwards journal, also known as sales returns, refers to the goods that are returned to the business entity when customer find that the delivered goods is not meet their expectations and therefore unsatisfactory, exist or incorrect goods. The transaction will be recorded in written inwards journals from the copies of credit notes that are sent to the customer who returned the goods or was overcharged. The double entry for written inwards is we debit written inwards accounts and also credit account receivable if customer bought the goods from us by credit. The function of written inwards journal is when customer made a sales returns, we need to debit the sales accounts so we can obtain the total amount of sales returns. So the clerical work can be reduced by using a sales return book. Value, quantity, and also the reason of sales returns also are known from these sales return books. Now let's move on to written outwards journal. Written outwards, also known as purchase returns, is passed by the company to record the transaction of merchandise purchased from the supplier when the customer find that the goods that delivered is not meet their expectations and therefore unsatisfactory, exists or incorrect goods. The transaction will be recorded in written outwards journal. The double entry is we will debit account payable if the company bought the goods from the supplier with credit, and we will credit written outwards journal. The function of written outwards is to help the company in recording transactions involving the return of the goods which were purchased by the company with credit or cash from the suppliers, thereby keeping all the track at the same times. And we also can reduce the balance of purchase return from the balance of the inventory to know the exact balance or the status of inventory present in the company. In conclusion, we know that written inwards will reduce the amount of sales, whereas written outwards will reduce the amount of purchase expenses. So in a view of this, returns may be subtracted in the trading section of income statement from their respective sides, whether purchases or sales. That's all from me, and my next team member will continue this presentation.
Hi everyone, I am Nur Hasman Nazib bin Korisham with my number 01DKB20F2001. So today I will continue with our presentation and I will explain more about cash book. So what is a cash book? Cash book is a financial journal that contains all cash receipt and cash disbursement, including bank deposit and withdrawal. Entry in the cash book are then it will be posted into the general ledger. Next is how does it work? In cash book, all the cash transactions made during an accounting period are being recorded. A cash book usually will be divided into two parts. First, the cash disbursement journal, which record all the cash payment, and second is the cash receipt journal, which record all the cash received into the business. The cash disbursement journal will include items such as cash payment for rent, insurance, or to pay account payable, and the cash receipt journal will include items such as payment made from accounting receivable, commission, or cash sales. The main objective of cash book is to handle the cash efficiently and making it simple to access cash balance at any point in time, and allowing manager and corporate accountant to budget their cash properly when needed. Accessing cash information into a cash book is probably faster than accessing a cash book atau a ledger. Cash book format. Cash book will be divided into two parts or column. On the left side, we have debit, and on the right side, we have credit. In the debit, it will have a date of transaction, detail of transaction, volume number, discount allowed, the amount of cash received, and the amount of check received. On the credit side, we have the date of transaction, detail of transaction, volume number, discount received, the amount of cash payment, and the amount of payment made by check. How to recording a transaction into a cash book? To record it, all transactions in a cash book have two sides, which is debit and credit. All cash receipts are recorded on the left-hand side as a debit, and all cash payment recorded by date on the right-hand side as a credit. The difference between the left and right side show the balance of cash on hand, which is showing a net debit balance if a cash flow is positive. How to balancing a cash book? To balancing it at the end of each month or another appreciate period, the amount column of both sides is totaled. The difference between total is written on the lighter side below all other entries. This difference is the closing cash balance for the current period, and it is usually termed as a balance period forward or balance CF. In the next period, it becomes the cash opening cash balance and usually termed as the balance brought forward or balance BF. Lastly, I will explain about the example of cash book transactions. So like we can see on the slide, we have the example of cash book, also the example of transactions. So we move to the transaction on January 1, 2019. Already store cash book show debit balance of cash RM1550 and bank RM13575 during the month of January following the business return 6. So we know that Noreni store already established, already operate before this on the time periods. So we recorded on the as a balance brought forward from the past. So we recorded on the cash book on the debit side with the January 1 particular balance brought forward, and we recorded on the cash and bank 1550 and 13575. Next is on January 1, Lorraine store purchase office typewriter which cash RM750. We made when you made a payment, so we recorded on the credit side. So on the date January 1, with the particular office equipment, we recorded on the cash column 750. Next is on January 4, we received from Hussein a check for RM2550 in part of payment of his account. So when we receive a payment, will be recorded on the debit side. So on the date 4, with the particular A Hussein, we recorded in the bank side because we received a check, we recorded in bank side 2550. And then on the January 6, we paid by check for merchandise purchase for RM1005. So we made a payment. So we recorded on the credit side with the date on January 6 with the particular purchases and the bank side 1005. On January 10, we received from Hayat Han a check for RM775 in full settlement of his account, allowing him a discount RM50 ringgit. So we will receive a payment. We will record it on the debit side with on the date 10 with the particular Hayat Han, and then we recorded the discount allowed on the discount allowed column RM50, and then on the bank side we recorded the amount of we received the check which is 775. Then next is on January 12, we sold the merchandise to different bros for M1500 and he paid by check. So another transaction, we receive a payment, we receive a money, so we recorded on the debit side with the particular 12 with the particular sales, and we recorded 1500 on the bank side because we received a check. And on January 15, we pay Salman RM915 by check discount, and we receive a discount receipt RM5 ringgit. So we made a payment. We recorded on the credit side with the particular paid Salman with the particular Salman, and the total of discount we received is RM5 ringgit, and on the bank side we recorded 95915 because we pay a payment by a check. And then on January 27, pay back to Gulzar Ahmad by check. So we made a payment to Gulzar by check RM950. So we recorded on the bank side C50 total. And then on January 30, we paid salary by check to check RM1750. So on the date 20 with the particular salary, we recorded 1750 on the bank side. And then lastly, the last transaction is on January 31, the Norani store drew from a bank for office use RM250. So in this transaction, we call it as a contra, which is first, we recorded on the credit side as a payment or as a cash flow. So on the particular cash on the date 31 January, we recorded in the bank side RM250, and then we recorded another one on the debit side within the date 31 January with the particular bank, and then we recorded the total of the draw on the cash side 250, so that we call it as contra. And then we need to balance the total amount of cash and bank on also discount received and discount allowed on the two sides, which is for debit and credit, and then the total of who more than the both will be recorded on the as a total for both sides. So we can see on the debit side, the cash and bank total is more than the cash and bank total in the credit side. So the debit side will be minus with the credit side. So we will get the balance carry forward being recorded on the credit side with RM cash RM1050 and 050 and then 138,630 to open the bank side. So and then we will move it to the balance as a balance brought forward and with the date new of transaction or new time period for the accountant period. With the balance brought forward, we record the total cash and also the total bank. So that's all from me. Thank you.
Thank you to my team members, and hi everyone. My name is Muhammad Syamil bin Muhammad Anifa, and my number metric is 01DKB20F20 and 30. Now I will continue about my part of presentation, which is general journal. First at all, what is the definition of general journal? The definition of general journal is the journal of the company in which initial record keeping all of the transactions is done which are not recorded in any of the specialty journal maintained by the company like purchase journal, sales journal, cash journal, return outward journal, and return inward journals. It is where double entry bookkeeping entries are recorded by debiting one or more accounts and crediting another one or more accounts with the same total amount. The total amount debited and the total amount credited should always be equal, thereby ensuring the accounting equation is maintained. Next, we move on to the next slide, which is all other transactions are not entered in specialty journal account for in a general journal. It can have the following type of transaction, which is the first one is account receivables, second account payables, third equipment, fourth accumulated depreciation, and fourth expenses, and lastly interest income and expenses extra. Next, we move on to the general journal format. General journal format, it provides the chronological order of all non-specialized activities. It consists of 4 or 5 columns. In order to write our transaction, we have to write our general journal format above, which is the first one is date of transactions, second short description, third debit amount, and lastly credit amount. In this slide, I will explain about how to record our journal entry. First, according to the rules of debit and credit, when an asset increases, its account is debited, and when an asset decreases, its account is credited. In this transaction, machinery and asset is increasing and the cash and asset is decreasing. So the journal entry will be made as follows. As you all can see, first, we have to write our format, which is date, account titles and explanation, and debit and credit. First, we have to write our date, and second, the ledger accounts involved, which is from the statement above, which is the statement that include the involved in this transaction is machinery and cash. And third one is narration to describe transaction, which is to describe what is the purpose of the transaction is involved. And lastly, amount of transaction, which is 15,000, debit and credit. Debit and credit must be equal amount. All business transactions are recorded in the general journal in a manner illustrated above. After making journal entries in the journal, they are periodically posted to the ledger accounts. Next, we move on to the flow process. Let us look at the flow process of entries before and after it is recorded in the general journal. Before entry is made, the maker has to decide. First one is the account which will be affected by the transaction, and second one is which account to be debit and which account to credit. I give you an example. The example is the owner buy office equipment by cash. So the owner have to decide what account that affected by transaction. Based on the statement that I give, the account that is affected by this transaction is office equipment and cash. So the owner have to decide which account to debit and which account to credit. So this is the flow that maker has to decide. After making entries in general journal in accounting, all the transactions are summarized and posted in ledger. Now, let's look the example that how to record in general journal. The most service engaged in the following transaction during the month of November 2015. So, before we record our transaction, we have to write our format first, which is date, account title, and explanation, debit, and credit. Okay, the first transaction is paid office rent for the month of the November 500. So, first, we have to write date, which is November 3rd, and we have to identify which account that involved in this transaction. So based on the transaction, the accounts that involved in this transaction is office rent expenses and cash. So the debit and credit amount, and don't to forget to write the generation, which is paid office rent for the month of November. So same as the rest, which is purchase office supplies RM 250,000. So maker has to decide which account will be involved, which is office supplies and cash, and debit credit, and the date, which is November 6th. And don't forget to narration, which is purchase office supplies for cash. And the same as the two above, which is purchase office equipment on the account 4,500, which is the account involved is office equipment and account payable, and 405,000 debit and credit, and the narration is purchase office equipment on account. And lastly, November 21st, bill client 24,000 on account. So the account that involved in this transaction is account receivable and service revenue. The debit credit amount is 24,000, and the narration is bill clients on account, and the date is November 21. So this is the format that we have to follow in order to record in general journal. The first one is date, account title, and explanation, debit and credit. And in order to record this transaction, the owner have to identify which account has to be debit and which account has to be credit, and which account is involved. This is the basic of the owner have to know in order to record in general journal. So lastly, the conclusion that we can conclude general journal is an initial record keeping that records all the transactions except for the ones which are recorded in a specialty journal like cash journal, purchase journal, and etc. It states the date of transaction, description, credit, and debit information in the double bookkeeping system. These journal entries are then used to form a general ledger, and the information is transferred into respective accounts of the general ledger. The ledgers are then used to make trial balance and finally the financial statement. That's all from our group. Thank you so much.